All right, welcome back. We are going to be taking a look at the market statistics for October 2022. It has been a crazy month. Some of the things that we're going to look at are going to surprise you. Some of the things we've been talking about and kind of waiting for, and they finally come to fruition. But let me tell you, there is some wild moves in the real estate market in October. So stay tuned. You're not going to want to miss this.
Marketing always matters and we do it well. And everything is guaranteed, service over sales. Keep 100+ clients always satisfied. So call me Neo, what you need just to strategize. One eye on the market here to make you profit. Besides myself.
All right, so taking a look at average sale price. We've been declining since April pretty steadily. Down to around 367, I think we were last month. But in October, we spiked back up to $394,625, which made up, almost all, maybe 70% of the losses since April, which is huge and confusing because this is not the market that we've been hearing about when we watch the news. And honestly, even in my business, this doesn't really reflect what we're seeing right now. So this statistic alone would be very confusing, but I think as we get farther into this video, we're going to be able to explain a little bit more. But it's worth noting that still home values year over year are up almost 12%. Like I said, last October, it was $352,647. Now up over $394,000. So still significant gains year over year. And sellers, you've still got a lot of equity in your homes. Price per square foot. Now, this is important to look at, and it actually held steady from September to October. So $215 per square foot both months, which looking at the average sale price suggests not that people are paying more per square foot for the home, but that they're actually just buying bigger homes right now. And some reasons why that might be, just spitballing, might be let's say some of the lower end buyers who would be looking for the smaller homes, your 3 bedrooms, starter homes, things like that. Maybe a lot of these guys are getting pushed out of the market and, maybe interest rates are too high for them. They don't feel like getting in right now. But the buyers who are selling a home, getting a lot of equity out of that and not having to get these huge loans, maybe don't care about the interest rates quite as much. And they might be upsizing into larger homes. And again, this is all just kind of trying to project or understand the data that we're seeing, but that the spike in sale price doesn't make a ton of sense. This makes a lot more sense with what I'm seeing right now. Things have been pretty stable. We're not seeing a lot of new inventory, and we're going to get into that next. So new listings, again, we've just been free falling since June, where we were at a high of about 491 listings in June. It's just been an absolute free fall since then. We only saw 294 new listings in October. So buyer demand is down, but new listings are also down, and that's kind of kept things stable at least and kind of held home prices where they are. And we'll see if that continues as things go on, as we get through the holidays. But for now, looking at new listings, this is incredibly low for October. If you go back previous years, we had 452 new listings October of 2019, 394 in 2020, and 353 in 2021. So it's just been steadily declining over the last 4 years. And in my opinion, 294 is pretty alarmingly low, especially considering that we really don't have much inventory to begin with. And looking at that, we're going to take a look at homes for sale next. We're down to 587 homes for sale on the market right now. Again, it's pretty steady decline for the last few months after a little bit of a spike. But still, this is extremely low. Looking at a broader market, obviously, this is kind of the COVID market here. So we're not really seeing what the traditional market might have looked like before the pandemic. But at least for now, we can see that things are starting to pull back in inventory, and we need all the inventory we can get right now. Pending sales. This is where things start to get a little bit crazy. In the last few months that we've been looking at this, pending sales, closed sales have been pretty much what we would expect. It hasn't been really too alarming, even though we were seeing new listings drop off. We were seeing home sale prices drop. It seemed like activity was still holding strong. And looking at pending sales, the last 2 months, they've been very, very low at 228. And that is concerning, especially, again, looking at past years. In October, we're traditionally quite a bit higher than we are right now. So we've kind of hit that holiday lull a little bit early, and it's quite a bit deeper than it's been for a while. Closed sales is where things get really crazy. So last month we were still holding here, kind of right in the range that we would expect. But in October, we saw it absolutely free fall down to 200 closings. And a lot of people are going to be alarmed by that, honestly. And again, we expect this during the holidays. Activity seems to slow down anyway. We've got an election coming up, which tends to affect buyer activity as well. And then obviously interest rates are impacting people. So, none of this should really surprise you. But when you look at the last, 3 years, we haven't been anywhere near this low. So it's definitely a wake-up call for some people who are still super high on the market. And again, we'll compare to previous years. In October, we've traditionally been well over 300 closed sales. And to be all the way down at 200 is pretty wild. Days on market, pretty typical of what we would expect lately, 12 days on market. So if you're pricing your home properly, you're still selling, right away. Because again, there's just not much inventory out there. Looking at months of inventory, as we've been talking about, we're holding real steady, right about 2 months of inventory. As we've mentioned in previous videos, this is basically decided by how many buyers, how many closings are happening, how many buyers are buying homes versus how many homes are available in the market. So if we had 200 closings and we've got, 400 homes available, that would give you about 2 months of inventory. Typically, we look at about 5 to 6 months of inventory being a normal market. Anything less than 6 months of inventory, 6 months of inventory, would be considered a seller's market. So we are still very, very much in a seller's market, despite how crazy some of these other aspects have been. We're not seeing sale price or the average sale price explode as we have in previous years, but it's still very much a seller's market. In summary, after falling steadily since April, the average home sale price spiked in October, making up more than half the losses since April. Again, this is a shocking statistic to me, but I really don't feel like it tells us the whole story. Price per square foot is holding steady at $215 per square foot, suggesting the buyers purchased larger homes in October rather than paying more for them. I think that helps round it out a little bit. But I think it's actually the not price-related statistics that are really concerning this month. New listings continue to fall sharply in October. We typically see a slowdown going into the holidays, but there is much less activity this October than we've seen in previous years. Pending sales held steady, but still quite low, and closed homes dropped like a ton of bricks in October. Activity is something like 60% of what we've seen in previous years, and that's a little bit alarming for both agents and investors, flippers, and people who are in the industry. Our total inventory hasn't grown at all. It's holding steady at about 2 months, and activity is falling off as buyers start the holidays early and sellers are tempted to hold on to their prime interest rates. But it's actually a great time to make a move if you're able to, and we're going to get into why here in a second. So a year ago, buyers were paying tens of thousands of dollars above asking price. They were paying their own closing costs and often paying for repairs, and they were paying thousands more to cover a short appraisal in some cases, all just to have the opportunity to buy the home they want, just to have a chance because there were so many offers coming in, there was so much activity. It was really frustrating for a lot of people. So yes, now rates are higher and you're going to pay more for the home because of the rates, but rates are temporary. There's a lot of people right now saying, marry the house, date the rate, right? So get the house at a low price, date the rate, and refinance later. Honestly, we don't know when you can refinance. It might be 20 years before you can refinance and get a better rate. We just don't know. But what we do know is that today buyers can negotiate a better price. They can get seller assistance with closing costs. They can stop writing appraisal gaps. And they can do this because there isn't the same amount of competition on the home that they want. And along those same lines, there's some advantages to being a seller in this market as well. So, as a seller, this is where we are right now. Prices have held up as well as we could possibly expect, considering what the Fed has been doing with interest rates in 2022. The Fed has basically come out and said, we have to crush inflation, and to do that, we're going to increase unemployment, and we're going to reduce consumer spending. And to do that, they've been increasing interest rates every meeting, and they've been hitting us hard, man. They've been hitting us for three points each meeting, and that's no joke. And they don't expect to stop anytime soon. It's probably going to continue into 2023. Tulare County is highly desired, and it's a special market, giving us some protection. Now, I can't remember which industry professional came out with the report, but I guess the Visalia area was like number 2 in the nation as far as places where people want to move. So in California, Tulare County actually has the lowest home value to income ratio in the state. So it's one of the most affordable areas in all of California to live. And that kind of protects us from a lot of this market chaos that we're hearing about, because as the bigger markets struggle, as your LA markets and your San Francisco markets and these large metro areas struggle with high home prices, people are just flooding here. You know what I mean? And a lot of times they're commuting out, or they're working virtually now. Since the pandemic, a lot of those options have opened up. So, our market here is quite protected. Not entirely, but it's definitely a great area to be in, because we're insulated from a whole lot of the problems that the larger markets are seeing. If you purchased a year ago or more, you should have a lot of equity in your home. So this reduces the risk of a major wave of foreclosures causing a crash in home prices in the near future. You have a lot of people talking about foreclosures coming. I just can't see it. There's too much equity in the market. So unless home prices in Tulare County really start to crash, I just don't see people going upside down. All of that said, the Fed is committed to stamping out inflation, and even with rate hikes at every meeting, we haven't really seen any positive effects on inflation yet. So we know the rate hikes are going to continue. We know the tightening is going to continue well into 2023. And in fact, many experts believe the actual recession is coming mid-2023. So we might not actually be in the recession yet. The Fed might actually be floating us right now to get through elections and all that. And we might actually see the real hit next year. So as a seller, these are things to consider, you know what I mean? Because right now home values have held strong, but it may not be that way next year. So if you plan to sell your home within the next 2 years or so, I really believe this is the best time for you to do it. Inventory is extremely low, new inventory is low, and homes priced properly are selling quickly, and you can still make a nice stack of profit before things really get crazy next year in 2023. And again, this is all just projection. We don't know what's coming, but I believe it's really becoming more and more clear as these months go on where things are heading, and the Fed is honestly being pretty transparent with where things are heading in their opinion as well. So thank you again for watching. I appreciate you guys checking in again, and we will see you next month. Take care.
In a little trouble, ask David, huh? When they never get it done, ask David, huh? They gon' wanna give a hand, ask David, huh? Need someone to set the day, ask David, huh? David, huh? David, huh? When they all falling short, pass me the baton. Can't handle your inquiries, a marathon. And can't nobody do it better, man, than David, huh?